walk us through how each of those growth happens and your decision making process as you grow and expand.
Absolutely. At the beginning, think I just did what everybody else did, which was, hey, become a flipper, go flip some houses because that's the way to make a bunch of money. And I took a bunch of classes with this organization called Nouveau Riche at the time, which actually was great long term from the education standpoint. It didn't had a not very great of a reputation just because a lot of people didn't ever take advantage and do anything with that education and they thought it was a scam. But in the end of the day, it was really valuable for me just taking the courses and I guess maybe gave me false confidence to quit and go into jump into real estate where I'm like, I got my first deal under contract and I hated working at the CPA firm, trading time for money nonstop. I was bored and just honestly in pain. I remember going to work and wanting to cry on the way to work, going, I can't just, it's just monotonous, boring stuff. Now I love it because now I'm like, save myself money and my investors money. So I'm really tuned in on it. But in the beginning, I think you just go through that motion of, okay, hey, this is the fastest way to make money. And I look back now and I say, crap, why didn't I learn how to just raise money first? Because then I would have held all of that and I did the math and I would have had over $50 million of net worth if I would have never sold them and just held them. That's a painful math lesson to learn through that process. And then you realize after starting to do a lot of them and needing to turn the lights on, we went through that process in the beginning where basically we were flipping quickly. We got an office at the World Trade Center in Long Beach on the 23rd floor and thought we were the shit and realized we were not the shit. We didn't know what we were doing. And my stepbrothers were two partners of mine, both computer programmers and electrical engineers. And I'm supposed to be the sales guy that can sell real estate as a CPA. Great, right? And I don't have a personality either at that point. And then we all quit, went into real estate full time, jumped into this thing, and we're like, how do we get as many as we can? And we were flipping like 5 a month at that time. It was easy to buy houses then and resell them quickly. The appraisers just magically appraised them for 20% more at the time, and you became an immediate profit center, right? And it was really interesting. But once you start to do enough of those and you realize how much of a crazy grind that is and how hard it is to scale that, at one point we were doing 10 flips a month, and you have to be crazy operationally sound to do that. You do take hits on deals. There's problems and delays and contractors theft and things like that you go through. And I feel like that is the rite of passage to go through so many individual problems that where now you stop becoming emotionally hurt by those items. Things that happen, you just start to focus on the solution instead of the problem, instead of reacting emotionally. And that's what flipping those 1,000 houses did for me, is it immediately takes away all emotion out of the problem. So that way I can say, okay, write down 50 things that are going to solve this problem. And when you start going into the multifamily space and the larger space, when you start doing a fourplex or a sixplex or a bigger unit and you realize, oh my God, I just made 3 times the profit instead of a quarter of the profit that I make on an individual single family home at one time for the same amount of work, just on a little bit bigger of a scale. And that's when you start to understand the multifamily business. And we've done full turnarounds of full gut job renovations on 50 plus units at a time, on even some where we bought one building for 150 grand. There was 18 units that we put 800 grand into it and sold it for 2.5 million a year and a half later. And you realize like those types of deals are really dope. And you start to get excited by that stuff. And then you start to, when we started raising more capital than we needed for our own flips and our own projects, that's when my friends started coming to me and saying, hey, we need capital too for our deals. And so I started raising capital for my friends' deals as a lender on that space where I could secure with first position money. And I got hooked on the lending deal, on a lending space, when I did a loan inside my 401k for $500,000 secured at 65% loan to value at a 14% flat rate. And then my 401k sold the loan, didn't borrow the money, sold 450,000 of that $500,000 loan to my investor. So I didn't have UBIT or anything because I sold it to them. I wasn't leveraging. And they made 8% on their money and I retained the rest. So I was making literally a 68% return on my 50 grand left in the deal. And when you start to understand interest rate arbitrage is when you really start to get interested in the debt side of things. And then you start to get get disinterested with the debt side of things when you have foreclosures and headaches and deal with theft on borrowers and all the headaches that go with it. And so now we just started buying the debt instead of originating the debt. And it's a much easier play to not have to talk to borrowers and deal with all that stuff. And we make interest rate spreads without having to do that and having the right due diligence process in place for those types of strategies. Yeah, so that's where a lot of this stuff was born. And we learned the lending business a lot of the way through doing seller financing on our properties to people's IRAs and 401ks on our single family homes that we're flipping, or structuring 1031 exchanges where we can hit their sales price, their down payment, and their loan amount, and being the bank for the rest, and then selling off that debt to insurance companies and banks and our other private investors. So you start to add these tools to the tool belt over a period of time as resources develop and show themselves to you. And every new asset class, you take a punch in the face and learn some new lessons, but it creates a long-term income stream that you can diversify into. And so it becomes really exciting over that time. Sorry, that was very long-winded,
Yeah,
but it's a lot of crap that we're doing.
yeah, that's amazing story. And then as like when did you start to expand beyond the hard money lending business, or and each type of asset that you expanded into, what has been your investors' response has been? Have you have been having to build a new investor base, or are you able to convert much of your existing investors into whatever the new ventures is?
So I position myself a little bit differently with my investor base. A lot of people on the call, if you're focused on multifamily or you're focused on mobile homes or one specific asset type, it becomes difficult to position this way. But what I've done is position myself more as a financial advisor, CPA, tax person. I even sit down for free and will help my investors with their tax position and help them and add that value to them and give away a lot of time. I even help my investors and my fund managers with financial situation, getting their personal financials in order, and some of the key processes to do that. And I'm actually teaching a bunch of military members shortly, this big group of this nonprofit group, on the financial foundation that you should be setting up first without going into the investing side. Because if you realize you have no business asking for the sale until you've actually built the trust, and you build
Right.
the trust through just adding tons of value. So if you can go do education on IRAs, on 401ks, on tax mitigation, on legal mitigation, on how to structure your investment portfolio as a whole to give you appreciation, inflation hedges, cash flow now, and really be an advocate for your investors, because really they should be investing in some value add apartments and value add projects with built-in equity to help with the downside risk, but they should also be investing in immediate cash flow to get them their needs right now too. And so by going out and becoming a specialist at a lot of different assets from the due diligence side and learning how to run the operations side of the business, because we don't raise for outside people, we primarily raise for our own stuff, and or if we're directly involved in the asset specifically, like our mobile homes, I work with another company, but I stepped in as CFO and helping with that company directly on a lot of their assets. Most of our stuff we are directly operating. And so when you have that infrastructure and you can set up, here's the asset management processes and procedures, here's the underlying property management and construction management and the overall quality control project processes and procedures at the asset level too, then you can really dive deep. And when you're looking at different asset classes and you're learning, hey, had to go from flipping to multifamily and mobile homes to lending, which all is correlated because it's the same type of numbers, now to the debt validation financing. I had to really dive deep into the operational structure. What happens if I have to take back over that debt? What's my collateral to value, and what's my safety precautions behind that, which is I'm at 25% of value, not 65 to 70% of value on real estate. And I'm collateralized against $20 million worth of receivables on a $5 million capital raise that has a historic 85% collection ratio on those receivables that are thousands of receivables, as well inside this for every $5 million. $100, it's 3,300 receivables with an average of a $6,000 balance. So you have to look at each scenario and each asset class independently for the collateral versus the operational performance, but also what happens if they don't pay, because that's what I had to learn the hard way on the lending business is what happens if there's no payment involved. What do you do? What's the action steps you have to take and how fast do you have to take them? I've lost so much money in the lending business being too nice and not having the, I'll say the F word pay me mentality, right? So like really going through and saying, yes, I want to help, but here's procedure, no emotion at all, and really having proper procedure in place on every asset class so it doesn't cost you long-term money on these things and having that dialed in. I think now with AI and some of the strategies we're seeing out there from an operational standpoint, we're going to get more and more efficient across the board, which is really interesting. Some of the things we're seeing on the AI side from the marketing perspective, but also from the operational perspective. We just brought in somebody to full time go look at every single system we have and audit every aspect of our business for AI implementation and automation. We're just going to invest heavily in that side because it's so key. But yeah, these are some of the things that we look at for sure.